So this is the topic that's in everyone's mouth right now, and it's all over the internet. So, and I'm very interested in this topic, you know. So let's talk about it. But first, let's watch this video.
Are we in a bubble? And is it about to pop? U.S. financial markets are on fire, breaking records seemingly every other day. The Dow Jones, that's up by almost 50% in the last 5 years. The S&P, 80%. And the tech-heavy NASDAQ, that's up 96%. So what's up with that? Well, people seem to chalk it up to AI. Companies that are building AI and companies that are investing in AI have no trouble getting people to give them money. But now some finance folks are wondering, are these companies really worth all that money? Or are we in an AI bubble?
No, the number's too high because I want to make more money.
I do think, yes. I do think the valuation are too high.
A little bit, yeah.
No way.
Why?
Because it's good for everybody. It's everyone it goes.
People are making comparisons to the dot-com boom and bust of the 2000s, or when the housing market crashed a few years later, plunging the U.S. into the Great Recession. There are other signs that have investors going, yikes. Interest rates could be going up. U.S. debt has reached a record $39 trillion. And a few months before the dot-com bubble burst, well, stock markets were reaching and breaching record highs. But it doesn't mean we are headed for a crash. Markets, after all, are pretty hard to predict.
There you have it. So are we in a bubble, guys? And this is a topic, like I said, that I'm very, very interested in. And I actually shared an article online a few days ago. And that article did really well. A lot of people got, a lot of people engaged with it, you know. So I thought, I'm actually going to read the article to you guys if you're interested, so we can both, you know, have the conversation together. And if you're interested in it, you know, feel free to just leave a comment below and like the video as well. And so let me go through it quickly. The question is, are we in an AI bubble? Okay. So right now, there's a debate happening that is keeping every single person on Wall Street and Silicon Valley up all night. And it comes down to one question. Is the AI bubble actually bursting, or is it just the beginning? Because here's the thing. The market right now is completely split down the middle, and both sides have a strong argument. On one side, you've got people pointing to some genuinely alarming numbers. Microsoft, which is one of the biggest AI investors on the planet, recently cancelled their Claude licenses. Why? Because the token costs were astronomical and it was too expensive to run at scale. You've got OpenAI owns internal documents leaking, projecting a 14 billion loss in 2026 alone. That's roughly triple what they lost in 2025. And if you zoom out for a second, they are projecting $44 billion in cumulative losses through 2028. Deutsche Bank went even further and estimated total losses between 2024 and 2029 could hit $140 billion. And it's not just OpenAI. Okay, Uber burned through their entire $3.4 billion AI budget in 4 months. 4 months. Okay, just go on. So on the surface, it looks bad. The idea that AI software was going to effortlessly replace human labor at basically zero cost. That part of the narrative is getting absolutely touched right now. But then, on the exact same day those headlines dropped, something completely contradictory happened. Chip stocks went on an absolute tear. The Philadelphia Semiconductor Index, which is the SOX ticker symbol, which tracks the biggest chip companies in the world, surged 65% year to date in 2026. And then within the same month, three of the biggest memory chip companies on the planet all crossed $1 trillion in market cap. Samsung hit $1 trillion on March 6th this year. Micron hit $1 trillion on May 26th this year, after an 18% single day surge. 18% in one day. Hynix crossed $1 trillion on May 27th. Three companies, $3 trillion combined in 1 month this year alone. So the question has to be asked, how is the bubble busting if the companies making the actual hardware are all eating $1 trillion valuation at the same time? To understand what's actually going on, you need to go back to the year 2000. Remember, the video we just watched touched on that, so I actually did as well. So let's carry on reading. The dot-com crash. Because back then, there were two very different types of company caught up in the same hype cycle. First, you had the software and the web companies. Things, like pets.com, companies with zero real value, no sustainable model, just burning cash on the promise of internet changing everything. When the hype died, they went bankrupt. Gone, just like that. But then you had infrastructure companies like Cisco, who were selling their physical routers and fiber optic cables that the internet literally ran on. They got caught up in the crash too, but their stock did drop, but the underlying demand for the hardware was real. The internet didn't stop existing just because pets.com went under. That's exactly the dynamic playing out right now in AI, artificial intelligence. The software side, in terms of the AI wrapper apps, the tools promising to replace entire departments overnight, that part is feeling the real pressure right now. The economics don't work yet. Enterprise clients are waking up to reality that running these models at scale is insanely expensive. But the hardware side is a completely different story. Here's why the hardware isn't a bubble. The big four hyperscalers, Alphabet, which owns Google, Amazon, everybody knows Amazon, Microsoft, everybody knows Microsoft, and Meta, are all projected to deploy a combined $725 billion in capital expenditure in 2026 alone. Let that sink in for a second. $725 billion in 1 year. That's a 77% increase over last year's record of $410 billion. These are not retail investors buying meme stocks on hype. These are some of the most cash-rich companies on the planet using their own balance sheets to physically buy up every chip, every server, every data center they can get their hands on. And the memory chip market specifically has gone absolutely wild. To go further, when it comes to the memory, let's focus on the memory chips. The high bandwidth memory chip, that actually powers basically every major AI system, have doubled in price in Q1 of 2026 alone. And supply is completely sold out for the rest of the year. The oligopoly of Samsung, Micron, and Hynix, the three companies that basically control this market, are now worth a combined $3 billion, like I said earlier. Now, the most credible voice on the bearish side right now is someone you need to pay attention to, and that person is Burry. Okay? If you've seen the movie The Big Short, and I have, you know exactly who this is. He's the guy who predicted the 2008 housing collapse when almost nobody else did. And he's now publicly comparing the current semiconductor rally to the final months of the dot-com bubble in 1999 and year 2000. And here's what makes his position different from most people talking about this on the internet. He's not just saying it, he's actually betting real money on it. He's taking out substantial put options on the chip ETF, on QQQ, on Palantir, Nvidia, and Oracle, all expiring in January 2027. So Michael Burry is essentially saying, I think this corrects hard within the next 6 to 8 months and is putting his money where his mouth is. Is he right? He's been right before when everyone said it was crazy. So this guy is actually is an analyst. So this is worth watching. Okay, it's worth paying attention to, in my opinion. But here's the plot twist that the bear case tends to ignore. OpenAI isn't projecting losses forever. The same, those same internal documents that show $14 billion in losses this year also show the company projecting it turns profitable and it's $100 billion in annual revenues by 2029. And that's roughly matching what Nvidia makes right now. So this isn't pets.com, burning cash with no plan and no path. This is high stakes infrastructure bets. Lose billions now, own the category later. The question is whether they have enough runway to actually get there before the money runs out. And analysts are now starting to split the entire AI era into two distinct chapters because of all of this. Pre-2026, which is the era of wonder, ChatGPT magic, stock prices going up purely on vibes and hype and the markets and the promise of what AI could do. Post-2026, which is the era of infrastructure reality, where the market is actually is punishing software companies that can't actually monetize and aggressively rewarding the hardware, chip, and energy companies that hold the physical keys to the kingdom. The fluff is being burned away, and the capital is consolidating into the things you can touch, the chips, the data centers, the power grids. So here's the bottom line. The AI bubble isn't popping clean, it's shifting. If you're betting on random AI wrapper apps that haven't figured out how to make money, yeah, that's going to hurt. But if you're betting on the physical concrete and the silicon that's keeping these machines alive, the super cycle on the side is still very much running. The real question is this: where do you stand on this? Are you pulling your money out of tech entirely right now? Or are you doubling down on the semiconductor giants and building the actual foundation? So that's it, guys. It's quite a long article, but after a few research, I was able to just put this together and consolidate my thoughts, because this is it's easy to look on the from the outside, on the surface level, and think that AI is going bust, but I'm here to tell you guys, AI isn't going anywhere. It's just getting started. It's just accelerating. It's just going to keep accelerating further and further, because there's been so much investment in this in terms of capital. As you can see, the companies that are winning this are Goliath companies. They've at the moment they've owned the AI markets. They're making enough revenue. Some of them are losing money, yes, but eventually they'll figure it out. ChatGPT, OpenAI in general, they just won their case against Elon Musk a few weeks ago when Elon took Sam Altman and OpenAI took to court, regarding them being a for-profit, because he was sold lies about it being a non-profit and stuff like that. But that's going to happen, But OpenAI, even then, I said there's no way Elon, even though they're going through appeal right now, but there's no way Elon Musk is going to win against AI. They'll probably come up to with assessments at some point in time. But yeah, guys, I'm someone who uses AI a lot. I like using AI. I think, there's no, I used to look at AI as something that's bad. Even with the article that I wrote, that I read out to you, I composed that with AI. I did my research with AI and stuff like that. Then I composed it and everything. So AI is something that you should embrace, and it's not going anywhere, guys. AI bubble isn't bursting. It might not, obviously, the way it's being predicted that it's going to take over the world and you will lose your job to AI. I don't think so. I think some people will lose their job, and they, some people have probably lost their job already. But AI, I think, it's a collaborative tool. Okay, it's a tool that you're supposed to use to collaborate with. Okay, regardless of what you're doing, whether you're writing or you're a graphic designer or something, or you're a data analyst or web developer, you use it to create. Okay, to work with you. I use it at work. I use it for my personal projects. I use it all the time. Okay, I use it to build some of my SaaS websites and applications and stuff. AI isn't going anywhere anytime soon. I'm sorry to say, but guys, if you're interested in topics like this, leave a comment below. Let me know what you think on the topic in general. So yeah, we can get into a discussion and talk about, is AI busting, or are you someone who embraces AI and like myself, you're looking forward to the future, of AI and data centers and so on and so forth. So yeah, let's have the discussion, guys. And if you like videos like this, make sure you leave a like below and subscribe to my channel for more videos like this. And I'll see you in the next video. Peace.